just a real quick example on the euro dollar. And again, let me preface it by saying these examples are for your learning and the benefit of activating your reticular activating system. That is to say that the only way you're going to be able to spot these patterns in real time before they unfold is for you to see them routinely every single day. Every time there's a new upload, watch it and fill in the dead space of your trading with study time looking at old videos. I'm going to make them very brief, very short, so that way you can go through, see them in price action, and that way you can come back and watch live analysis and you're able to see these things unfold as it happens. Only those individuals that would view this as useless hindsight are the ones that are not going to benefit from this. Okay, so if you're looking at it and considering this as useless, I'm not going to sit here and argue with you and try to defend that. The only way you're going to learn something is by repetition, and the best way to do that is to look at what's shown in hindsight. As you'll see, there's repeating phenomenon that take place every single trading day, and we look on lower time frames from a higher time frame level to see the pattern form. Okay, so looking at the hourly chart, and I'm going to draw your attention to this area right in here. We had equal lows. It's a sell stop run. How do we know that? Price moved away sharply. Now, by itself, that means absolutely nothing to someone that's not interested in learning how to read price action from the way I teach it. But from a hindsight perspective, it gives us a great deal of value in terms of insight, because if we know this is a run on sell stops, all we have to do is look for the bullish breaker. That means the high between the low and the stop run. So that's right here. Okay, so that comes in at a high of 117.20, nice institutional level. Okay, and we'll drop that on here. Now that's our higher time frame price level. All we have to do is drop down into a 15-minute time frame, and we're going to be looking at the time of day. Okay, now all we have to do is refer to that level and wait for price to break a short-term high. There's a short-term high right here. So when this high is broken, that's a break in market structure. Okay, so you want to use the low to the high that forms once this high is taken out. So we'll bring in our Fibonacci. Okay, now we're only using the bodies of the candles. Okay, the high and the low. And here's your optimal trade entry. Look at the respect of the bodies. Now, yes, we wick through a little bit here, but look at the body trading up to first target, which is the old high, and then target 1. Multiple opportunities to get out of target 1. Then it retraces, goes down below the old high, and then we'll look at this example as well for an additional setup for, this is just a bonus for you guys. This is the Asian session. Okay, and while we eventually did trade up to our symmetrical price swing, I'm going to refine this, okay, and show you one more example where the low on a higher time frame level, price trades through this short-term high, market structure break. Now we also have this high. If you missed that one, you can use that same pattern here. High is broken, so you use the low up to the high, highest point, in reference to the body. Okay, draw that up like that. You see 62% retracement level, nails it lovely. Price rallies up. First target, yes. Second target, yes. Right in here. And symmetrical price swing, exactly to the high. And we'll look at that in reference to what the actual price level is. Okay, so it comes in at 117.83, and the candle's high comes in at 117.83. Can't get any better than that precision. All right, so I didn't take either one of these trades. It's just for your benefit to see it, see the pattern. Again, all we're doing is looking for a higher time frame level, a short-term high to be broken, measure the swing or impulse leg up, referencing the body to body, lowest body portion that could either be a open or close to the highest open or close in the swing high. That's where you anchor your reference points. When it trades back down into optimal trade entry, that's your buy. First target's the old high, and then look for your projections on target 1 and target 2 and symmetrical price swing. Beautiful example there. Hopefully you found this insightful. Until next time, wish you good luck and good trading.